Hello, today is Tuesday, February 18th, 10:40 a.m. This is Jerry Furst with Traders Education Network with another trade log update on Lifelock. Lifelock is going to have earnings tomorrow. Also, we have a trade on Safeway with earnings tomorrow after the market closes. And so let's take a look. We have a little bit more complex trade with Lifelock. You can see I've got the March 2250 calls. I have 5 of those. And then I'm hedged on the put side where I've sold 6 of the 25 puts and bought 6 of the 2250 puts. So, and you can see that I put that trade on February 13th. Again, today now is February 18th. And so the concept is we had a President's Day weekend. I put the trade on Thursday looking for theta, time decay. But here's the issue. When earnings are coming out, same thing with the Safeway trade. You can watch that video on TradersEducationNetwork.com also. The theta that I was expecting is not going to be fully realized until after earnings. And so the problem is that let's take a look at the volatility chart on Lifelock. This is still the Safeway chart. If we go up to Lifelock, take a look at the volatility chart, you're going to see that the volatility spike over here is really messing with the chart. But if we could zoom in on that, you'd be able to see that the volatility is extremely high, and we're at an implied volatility percentile of 87. But that will drop back down after the market close with earnings coming out tomorrow. Actually, the volatility crush will happen on Wednesday morning. So that's when the theta will really kick in. The concept with Lifelock, the fundamentals is that the news with Target, a lot of people probably going to be getting Lifelock insurance as well as some other internet protection. I've also got a trade on Fortinet, FTNT, which is also provides internet security for the actual servers for corporations. We'll take a look at that in another video. But let's take a look. This is a complex trade on Lifelock. So effectively, we have a vertical spread with 3 days left where I've sold 6 of the 25 puts. I'm expecting Lifelock to go up. So this is a directional time decay on top of earnings trade. I'll say that again. This is a directional trade with time decay. We only have 3 days left on top of an earnings. So we've got several dynamics taking place. Now, Thinkorswim has what they call the expected market maker move. And typically, it's a guideline, but typically it does not come out close to this number when on high volatility stocks like Google and Priceline, Chipotle. But with LifeLock, they're expecting about a $2 move. I like to see around earnings, we probably could see a 4 to 5 point move. The stock is trading currently at $22. And if we look at the chart on LifeLock, you'll see that basically it's been moving from the bottom left to the top right, and just recently breaking above the $20 range for the first time. What this does is allow institutions that are allowed to buy stocks, sometimes they're not allowed to buy stocks until they break over the $20 mark, and even then they have to wait a little while to make sure it's just not going to hit 20 and bounce back. But typically institutions will start to go ahead and make purchases above 20 if they've been waiting. So So the concept is long-term, Lifelock is probably going to be a decent stock to get into. Uh, Looking back at the positions, you can see that I put on this March 2250 call back in January 30th. That trade is up. I picked it up for 70 cents, trading at $1.25. It's almost a double. And let's go ahead and take a look at option view. Let's take one more look at the charts. We're trading here at about 22. We hit a high last week of 22.84. I'm seeing a Fibonacci resistance of about 23.92 on the daily chart. But if I pull back and pull down the chart, let's see if I can pull this down. We should have prices even higher at about 24.50. So if I look at option view, if I just highlight this February row with 3 days left of expiration, this is what the risk-reward graph looks like. And so with earnings coming out February 19th, the morning of February 20th, we'll have a volatility crush. With option view, I'm able to go ahead. You can see this graph. This is the implied volatility, 30 days out, 60 days out, 90 days out, and I can adjust that one volatility strike to come down and keep the other ones where they are. So this is effectively where we're looking at the volatility crush on the curve. Notice it moved. If you saw that, you can rewind the video. You can see that when I hit OK, my risk-reward graph adjusted up. So now, if I'm going to hold this and wait, no volatility change, right now, on February 20th, if we were to hit 25, which is what I'm expecting, I'm expecting a price move upwards to 25. We should have about a $743 profit approximately, where the 6 22.50 puts that I bought for $1.11 become worthless. That was my protection. The 6 that I sold for $2.76 will become worth about 33 cents, and I may or may not cover. If we do get the move up, I might just let both options expire. Okay, so that's the vertical spread. Now, in the event that we have bad earnings and the stock gets crushed, let's say down to $19, in that event, then I'll have a $688 loss. I am rolling the dice on earnings on this, so that is a potential issue where I only have a few days left on these February options. Now, as far as the March options that I bought 5 of these, I still have 31 days left as of now, and that trade alone by itself looks like this. And if we were to go ahead and just bring this down to March 20th, 320, I'm sorry, not March 20th, February 20th. This is the time decay line just for a couple of days from now. Again, I'm expecting the volatility crush. It saved that volatility change that I put in, where I'm expecting the volatility to come out. It's probably going to come out to about the same as to where the others are. And so now, if we do end up going up to 25, and we have no change in implied volatility, we should have about a $1,300 gain on those calls. In the event that we go down to about 19 and I'm wrong, we'll have a $137 loss. So basically this trade here will leave intact as well. So that is the trade on Lifelock. And you can go ahead and watch the videos on traders-education-network.com. Inside the trade log, trades in progress. And so safe trading, everybody. Check out the Safeway trade also in progress. Today is February 18th, 10:51 a.m. Eastern Time, and all trades are subject to change. And remember, this is strictly for educational purposes only. Over and out.